Adrian Lim, Senior Investment Manager with Asian Equities with Aberdeen Standard Investment joins us now. Adrian, good morning. Thank you for joining us. Adrian, how are you assessing the quality of earnings so far? Because I think that is ultimately the holy grail for investors. Doesn't matter where earnings, geopolitical risk, political noises are moving. Ultimately, as an investor, you only look at earnings.
Well, so far we have had quite mixed results. It's been interesting to see that some of the IT companies are delivering quite decent, resilient growth numbers, primarily off of strengthening customer base from the North American core. But pretty much it's very difficult to call a particular trend. We are still seeing lack of reinvestment of capital expenditure across many different sectors. And financing remains quite troubled because the financial system continues to need some time to recover and to recapitalize its balance sheet. Not all financial companies, not all banks are going through this challenge, but they are enough to say that we can't generalize across the banking and financial sector. So it's a mixed environment as we expect it to be.
Now, Adrian, India has underperformed the emerging markets of late. What are your thoughts and what factor do you think is at play here?
Well, I think it's very difficult to generalize and compare. There are periods of time when India has outperformed the emerging market space through no credit of its own, but because the emerging market space has been challenged with other issues. So I would look at India on a standalone basis. I think one of the key challenges we've had with India recently has been the introduction of the capital gains tax over long-term capital gains, and that's something that's made the hurdle rates for returns higher than we would otherwise be accustomed to. And the reason for that is you have to compare India's investment case across the region with other countries as well. And this capital gains burden is not something that other countries or jurisdictions subject their investors to. So that's one of the issues. The second and the third issues are more fundamental in nature. It is the fact that there is remaining quite a lot of overcapacity within the system, and that needs to work its way through. There has to be debottlenecking of certain projects. There has to be a genuine recovery in demand across not just the public sector, but across the private sector and across industries as well. And that's not been happening. The third thing is that the financial system needs to strengthen. There are still stocks that are doing well. Stocks like HDFC Bank, Kotak Mahindra, HDFC itself continue to have strong balance sheets with very prudent lending and risk controls, but we can't say the same for the whole system generally.
Adrian, hi, morning. Let's talk about crude because that devil is back to haunt us. It's been surging continuously and now above that 77 mark. How big a risk could this turn out to be for the Indian economy and especially the markets?
I think energy prices are always a decision, a factor for countries like India, where we import a lot of the supplies and the fuel. And it's something that cannot be overstated. The government has done a good job being as prudent as it can. I think the introduction of the GST was good. It widened the tax base and the tax net. And it's also something that needs to, it's a reform that's very useful in terms of simplifying businesses and bureaucracy across state and federal lines. The implementation is a difficult one. It's a challenge that cannot be underestimated. But to get to this stage, the GST has been a strong deliverable by the government. The other thing is fiscal prudence. I think the government has also been very frank and forward in its guidance in the fiscal deficit. It has tried to control costs, but it will remain a challenge that it needs to focus on over the next 2-3 years. So oil is important, fuel prices are important, but I think the government's response has been more than fair in this circumstance.
Adrian, have to talk about the rural recovery which is currently playing out, and there is a big name on this theme as well in your portfolio, Hero MotoCorp. Wanted to understand what are the other stocks that you're bullish on to play this theme?
We have a very diversified approach into rural India, and it's not just Honda, it's Levers, it's Godrej, it's ITC, it's things like Group Finance that we hold in some of our funds. What is important is that the rural strength will come into fore over the next decade or so. Not all of that is commercially viable at this point in time. But many Indian companies, the better ones, the better resourced ones, have got rural strategies that have a long view in mind, and we welcome that. We think that it's important that the infrastructure and the network reaches out into rural India, but we also need to recognize that we need to be more patient, and some of these investments will not pay back within the next year or 2 or 3 years even. But that's something that good companies with strong balance sheets can take a measured call and invest in, and that's something we would encourage. Rural is important, and it's something that we need to encourage and have some exposure to in our portfolios.
Right, Adrian, cement volume growth is back to double digits. Do you see that sustaining? Which names are you bullish on within the space? Ultratech, Ambuja, what are your top bets?
We have Ultratech, which is a bigger position. We have a bit of Ambuja. Cement is important. We like the cement companies, but it's been a very checkered short-term history. We have had demand come and go, prices firm up and weaken, and it's quite region-specific, and it's too early to call a sustainable recovery in cement yet. There is still quite a bit of overcapacity. Utilization levels have solidified to some extent, but not enough to encourage too much optimism yet. So it's something that's nice to see over the recent quarter, but we won't call a strong recovery, sustained recovery quite yet.
You know, consumer names like HUL, which you have in your portfolio, have surged to fresh record highs. How are you looking at, investing in the consumer business given that valuations are seeming stretched?
I think HUL has got a strong network, a strong portfolio of products, and it's got reach as well. It is one of the companies that have been investing into the rural market space, and quite a lot of those things will take some time to work its way out. You reflected that valuations are not cheap, they are quite demanding, and that's true of the consumer staples space. So what is important is that we want some exposure there, but we must be very selective, and we must control the weights of what we have in the consumer space. If things were 20% cheaper, we would have more.
Adrian, such a pleasure speaking with you. Thank you so much, as always, for taking out precious time of yours and joining us and talking about where you feel the Indian market is headed.